Hello everyone, thanks again for joining me in this demonstration video of the All-in Trading Options Journal spreadsheet. In this third video of the demo series, I will demonstrate how to enter trades in the journal. In the previous two videos we have shown how to set up the accounts, so that's in this tab, and also the traders, the profile data of the different traders that we can use in the different accounts. So with this being set up, we are ready to enter our first trade in the journal. On top of the journal, I created a small automatically calculated dashboard providing some summary information about the number of trade entries, like you can see here, the realized P&L, the total realized P&L, total unrealized P&L, and this separately for options and for stocks. On the right hand side of the dashboard, if you go a little bit to the right here, you can see a little bit hidden an overview of the color codes and the meaning of the color codes as they are used in the fields of the spreadsheet. So for example, the light blue fields, as you can see here and also in the spreadsheet here below, the light blue fields of the dashboard and the journal are all calculated fields. The blue color of a calculated field only changes if it's relevant, for example, to show a green field for positive results and a red field for the negative results. Once you're a little bit used to the color codes, you will see that it's quite easy. Okay, let's go back here. The part below the dashboard is the actual journal. As you can see here, I'm scrolling right now, with on top the field headers indicating what the field data is all about. The fields are split up between opening parameters, current parameters, and closing parameters, as you can see here. And at the end we have trade results. So there are different fields for different stages of a trade: opening, follow-up, and closing. When you start with the journal, you will notice that there are about 50 rows ready for data entry. When I scroll down, you will see more or less 50. And as you will progress when adding new trades and you are running out of rows, you will see that there is a copy row. As you can see here, a copy row on the bottom of the table. And you can simply insert in between empty rows to add more rows. And the only thing you must do is to copy the copy row onto the inserted rows and renumber them. This way all formulas and conditional formatting will be present in the new inserted rows. This sounds maybe a little bit difficult, but it's very easy. Let me quickly show you. So let's say that I want to add a couple of new rows, here for example, and I want to insert them. So I right click, insert 7 rows, above or below, that doesn't matter. I will take below in this case. And as you can see, there are some new inserted rows here. So the only thing that I need to do right now is to select the complete copy row. I do copy. I select the inserted rows and I paste. Okay. And the new completely with formulas and conditional formatting rows are inserted. And the only thing that you need to do, the last step for adding rows, is to renumber the sequence number here. And the rows are inserted and ready for new trades. So with this being explained, you know in the future when you are adding rows and you are getting short of rows, how to add them. So the trades are filled from top to bottom, so the newest trades are on the bottom part of the table. Okay, time to enter some information into our first row. When you look at the row, you see that the only field in white is the action field. So the first step is to select the action to indicate what the entered data is all about. Action is a drop-down field, so you can select between STO, which is sell to open, BTO is buy to open, then sell shares, buy shares, deposit cash, receive cash, and withdraw cash. Now, especially these last three actions are mainly used for the wheel strategy purposes, so I will not focus on them right here. I will explain that in a later video. So let's say that I'm an option selling type of a trader and that we will enter such a trade. To demonstrate how this is done, I will use a fictive trade of selling a naked put option, for example, of the stock of Disney with an expiration with 20 October 23, a strike price, let's say, of $65, and let's say I receive a premium of $2.25. Let's imagine that I have actually executed the trade and I'm now going to enter it in my journal. So the first step is that I select the action sell to open, because I'm selling a trade to open a new position. The spreadsheet will, depending on the selected actions, indicate which fields need to be completed in order to make correct calculations further on. The gray fields are not required, so I will leave them and only complete the fields in red. So these fields will change when data is entered. You will notice the actions sell to open or buy to open are actions linked to the opening of an option position. So the next that I want to enter first is the option strategy that I chose. In this case, I am selling a put option. You can see the full name description of the different strategies. When you have the drop down, there's not a full name, but you can see the full name description in the backend data. As you can see here, action object, I've added most of them. The most common ones are in this list. You can even add, if you want to, a specific strategy that you use and that is missing in the list. But for now, I think that's quite complete. Let's continue with entering some data. So with the put selected, I continue from left to right, entering the rest of the data of this trade. The two first fields are two date fields. The first one is the actual date I sold the trade and made the trade entry in the journal. I make it like a habit and a little bit kind of a discipline to enter the same day my trades. So the first one is then the 1st of August 2023. So I'll select 1st of August 2023. And as you can see in Google Sheets, you can double click the field and select the data from a calendar. In the Excel version, it's a little bit more complicated. There you need to type the actual date into the field. So with the first field being filled, I go now to the second date, which is the date of the initial opening of the trade. So the second date allows me to make a distinction between the real initial date of opening and the date of entering a position in the logbook, which can also be the date that I enter a changed or an adapted position. For example, when I'm rolling an initial position. So rolling will be explained in a later video, so it will become more clear when I explain that the exact difference between those two dates. But of course here, when we first enter a trade for a completely new position, both dates are the same, being the 1st of August 2023. So I also select here the same date. Next, I select the account ID. Let's say that I'm trading with John's account, and John is a trader who will execute the trade. Next, I select the ticker, and I've told you about Disney. So I'm looking in the list to find the ticker of Disney, and the share price, let's say, was around $100 at the moment of the trade. Now, let's say that you're missing a ticker from the drop-down list. Same here. You can add a ticker symbol in the back-end stock data tab, where all the symbols that I use, the tickers that I use so far, are mentioned. So for example, if you want to add, let's say, the ticker from Unity software, you go to the ticker symbol field here, you add U, and the next thing that I do is I will pull here on the formula, which automatically generates, as you can see here, from Google Finance. It will search the price of the ticker, the closing price of the ticker. Now, in order to keep the list in an alphabetical order, you can select all tickers in the column and just avoid that you select also only the tickers. okay, like this. Selected them. I go to data and I click on sort range from A to Z. And as you can see, they are sorted in the correct alphabetical way. This means that now in the journal, if I would select or search U, it will be not the last one, but also in an alphabetical way, as you can see here. Okay, back to my trade with Disney. So with the ticker selected, I complete the rest of the fields. The share price at the transaction was 100. Okay, that's already entered. You notice that the field credit or debit is automatically generated based on your previous selection in the action and in the options strategy. I give a short description about the strategy itself. I do that mainly for myself, but so this is a free field for you. I will write naked put, and I mention the strike price, and the strike price that I will use is like 65. The expiration date was set to 20th of October. The strike price was 65. The quantity, I will sell only one put option. The transaction price, being the premium that I get, is 2.25. It's dollars, let's see, 2.25, like this. Total fees, 2. My broker, let's say, charges me $2 to get the transaction done. For the price of the trade, you do not need to work with a plus or a minus sign. In case you sell an option, the spreadsheet will treat it as a credit automatically, and in case of a buying, let's say buying action, it will automatically debit the price. So that is very easy. And next, the spreadsheet will take also into account the fees that you enter into the spreadsheet. The fees that you pay to your broker. So in this case, for John's broker, that's $2. So add actually $2 here. The spreadsheet will take the fees into the profit loss calculations automatically. Now the next 4 parameters are trade-specific parameters that you can retrieve from your broker's application. I use them to guide the management alerts and when I want to analyze my executed trades. So this is not the place to elaborate about these parameters themselves, but I will complete these fields here in the demonstration. These fields are the IVR, or the implied volatility rank, the SPY beta weighted delta of the trade, the probability of profit, and the margin or the buying power requirement of the trade at the moment of the opening of the position. So let's complete them now. Let's say the IVR was 25. The SPY beta delta was 2.5. The probability of profit was 70%. And the margin requirement was $1,500. The next 3 fields are automatically calculated and are the margin or buying power expressed in the percentage of the net liquidation value of the portfolio. This is a parameter that is a part of the risk management parameters that are included in the spreadsheet and that are included in the account. Depending on the set threshold in the account data of the maximum percentage of margin requirement or buying power per trade, this field will give a color indication that the threshold is breached or not. And if we go back to the account, we can see we have put a maximum, not here, profile data, you can see we have put a maximum of 7% to John's account. Maximum percentage of margin requirement or buying power per trade, 7%. So this field, if we go back to the journal, with 6.98% does not give a warning color. If we change now, for example, our parameters, and let's say we give it a 6, you will notice that there will be a color alert in the journal indicating that this trade violates the trade management settings as they are entered in the account data. This is of course only an indicator, so you can of course still do the trade and ignore the color warning. The spreadsheet also calculates the initial numbers of days, here 80 days in this case, and the exact opening amount of the trade that in case of a sell to open is a credit. As I said, the amount takes into account also the paid fees. Okay, good so far. Let's go just back and change this back to 7%, the initial settings of the account, and the warning here is not longer visible. Okay, good so far. Now if I scroll a little bit further to the right, there are still 4 fields colored red that we need to complete, and as you can notice, these are parts of the current parameters. In current parameters, we can enter the actual follow-up values, such as the current price, the current SPY beta weighted delta, that will change over time. And these parameters will have an impact on whether we want to close the trade or maybe roll the trade, depending on the situation, and will be used in the spreadsheet to give a situation overview that will help us finally to make trade decisions and trade actions. So basically, whenever I'm updating my situation, I update these fields here in the current parameters with the values I get from my broker's account. When opening a trade, like I just did, these values are initially the same. For practical spreadsheet purposes, there is a field here in the beginning called the position status. Here you need to select the status of the trade. Open, and it's a drop down, it can be opened, closed, assigned or rolled. Now depending on your selection, the spreadsheet knows where to make specific calculations and make specific color formatting throughout the spreadsheet. So this trade is still open, so I should select open, like I did right now. Imagine you would select closed, assigned or rolled. You see that there is an error. The field will color red, indicating that the status is not possible because there is not yet data entered in the closing part of the trade. And as long there is no data there, the position should be open. So I select open again, and that's also the status of the position for now. Next I enter the price of the put option, which is 2.25. The SPY weighted delta was 2.5. Okay, let's get this correct. 2.5. And the current margin requirement or buying power requirements is also the same, $1,500. Here, for example, this shows that there's somewhere an error in one of your data entries. And you can see I made here an error. I will need to adapt that, do it correctly, 2.25. There you go. The other columns in the current parameters are again calculated values who will help me, and I'm talking about this one, who will help me in the management of the trades. They give indications of the current margin percentage of the net liquidation of the trade, the unrealized profit loss of the trade, and here you see the immediate loss is $4, because this is the impact of the fees for opening and closing. The spreadsheet considers the opening and the closing fee the same for calculating the unrealized P&L. And based on the unrealized P&L, we also calculate with the spreadsheet automatically the max profit in percentage. In this case, it's also negative. Days till expiration is calculated, taking into account the today's date and the expiration date of the put. And finally, the spreadsheet will give a recommended position action, a recommended action based on the management parameters that were entered into the account parameters. Here it indicates that I should do nothing and just wait. That's logic because I just opened the position. Now let's say that you make an update to the current parameters and that over time the stock rises to $90. It was initially 80, it rises to 90 and the price of the put falls to 130. So let's update only the price for now and see what this has for an effect on the journal. I add here 130 and you can see that the unrealized P&L and the percentage of the max profit change also automatically. I have now an unrealized P&L of $91 and this means that that I am at 40% off max profit. The same updated calculations in the spreadsheet would happen if I change the margin requirement or, for example, the SPY beta delta. The calculations will adapt automatically. Now imagine that the stock shoots up to 100 and that the price of the put will drop to, let's say, 95 cents. If I enter 95 cents, you will see that the spreadsheet automatically detects that the trade parameter of managing profits as from 50% of max profit is met, and the recommended action changes to manage profit, and this in another indicative color. This way, by updating regularly the values of the open trades in the current parameter section, the spreadsheet will really help me or really help you to manage and follow up the trades. Okay, with this data entered, the position is now open and I can do the follow-up. Also at account level, because when I go back to the account and I take a look at the account of John, I see that the margin requirement of the buying power percentage of the net liquidation value has changed. You can see also here 6.98. Also the SPY beta weighted delta has changed to 2.5. And these are exactly the same values of the one trade that I entered in the journal. So at account level, the sum of the different values of all the open trades is made to see the total value at the account level. So at the moment I have only one trade open, but imagine that I have a second trade with another margin requirement that would add up. So also at account level, color alerts are possible when the management thresholds for these parameters are breached. For now the values are still below the threshold, but you can test the color indications if you want to by changing the values in the journal. So let me demonstrate. I go back to the journal. Just make sure that you always change, once that an entry is made, that you change in current parameters and not in opening parameters. So let me change, for example, the current SPY beta weighted delta to 25, which is a high value, and see the impact. I go back here to the account and you can see here a color indication telling me that my SPY beta weighted delta is too high. If you look here to the right, you can see that I want to keep it between minus 21.5 and 21.5. It's over 21.5, so it will give me a color indication. Let me change now, for example, in the journal the margin requirement. Instead of $1,500, I will take $10,000. It automatically will give me at the position level an indication, but also at the portfolio level, where I make the sum for all the different trades, it will also give me an indication there that the threshold of 35% was breached for John's account. Okay, I will just go back, change these values back to 1,500 and 2.5, and I still got recommendation to manage the profit. I hope you see the power of these features, as they can help you to act on opening and managing your trades. It helps me, I'm sure it will help you too with your risk management. I note that the filtered results tab is a topic for a later video, but if you take a peek over there, you will also notice that the open trade is now showing in the open positions overview fully automatically. Okay, let's finish up the last part of our journal activity, being closing our trade. So let's say that indeed the price of the put has become 95 cents and that I want to manage my profit, which is then to close the position and lock in the profit. Obviously, I close the position by making the transaction in real life in my broker's account. And now I want to enter this in the journal. I need to select the transaction type. The transaction type is also a drop-down, and the possibilities are buy to close, sell to close, or roll the position. In this case, I can only select buy to close and roll the position, because selecting sell to close, it would give me an error because I can't close the position by selling it because I'm short already. So I need to change it to, in this case, buy to close. I will not elaborate here about the rolling of a position because I will treat that in a later video. So we want to close the short position by buying to close, so I select buy to close. Next, I give the date on which I bought back the put option, at what price, the quantity and the fee. I have also added interesting information for analysis later, such as price of the underlying at closing the position and the IVR. So let's fill this in. When you enter the closing date, for example the 18th of August, you will notice that some fields of this row will change automatically to closed. And the color indication appears in the field status position, indicating that I should not forget to change the status of the position. So I will first complete the rest of the data. Underlying price, let's say it was 100. The IVR was 16. I will close one quantity, one put, one option, and the closing price was 95 cents. And the closing fee was $2. Also here, two closing parameters are automatically calculated. The number of days the position was held and the closing amount based on price, quantity and fees is automatically calculated. In notes you have the possibility to add a note for this specific trade. I usually use this only when rolling, as I will show in a later video. And if you scroll to the right you will see the trade results automatically calculated, being the net profit loss, in this case 126, and also the return on capital and the annualized return on capital in percentage. These percentages are of course based on how much capital that you used to keep the trade. The very last step to closing the trade in the spreadsheet, and that's why it's also marked in red, is to update the status. So you need to select closed. And this has two consequences. It will put a large part of the row in dark gray, as you can see here, clearly indicating that this is a closed position. And this is handy because when you scroll through hundreds of rows, you can immediately see the open and the closed positions. And also, the second consequence is that it will no longer show the trade in the open positions overview in the results tab. So here it is no longer present. Nice. So, with this first entry in the journal, we'll learn plenty about the use of the spreadsheet, and you are ready to enter new trades yourself. So for now, if you have any questions, don't hesitate to shoot me an email or to post your question in the comments below. I'll respond immediately or as quick as possible. The next demo is how to enter a change in a position when rolling a trade and entering this in the journal. But that is a topic for the next video. Thank you for following till the end, and I will see you in the next video.